Last week was a very big roller coaster week. At one point, the S&P and the NASDAQ were up 6% last week, and they finished 1.5% and about 0.5% up for the week. A lot of volatility. A lot of people got scared. Even today, I think the markets are down again. They started down 1% last night, and they opened up, and now they're back down again. This is insane. So this week, a lot of news coming out. Some big news. Consumer sentiment comes out. The University of Michigan Consumer Sentiment Report comes out on Friday. We have retail sales coming out, but also CPI. And CPI, as you guys know, has really leveled off in the last few months. Now, I know people, as much as I'm not a big fan of Biden, he is accurate when he is saying that CPI has flatlined the last few months. Mo, why don't you tell me your opinion on that?
So the core CPI,
Yeah.
that excludes the energy. And
Yep.
So with that, I think that number is going to be good. I think it'll be fine, but I think you need to look at what's actually hurting the pockets of people in this country.
Well,
It's
yeah,
actually,
of course.
So we have to look at the number. The number is going to be important, no doubt, but also look at the other numbers. Include inflation. Include energy, include food, and see what's going on, because food is still running away. They put out the comparison chart. You'll see it on Thursday when it's put out. You'll see the comparison chart of cars and energy and healthcare and food and whatnot. Those numbers are still running away, and I still think that that's the main issue. But I think that CPI number will still be relative to that 8.3 number.
You know, I hear you on that, and I just don't think the energy is as bad as people make. I mean, look at this right now. I will say OPEC announcing that they're going to cut production by 2 million barrels a day. Mm-hmm. That does not help things. No. But look, we hit a peak, $5 a gallon right here, and now we're at $3.78 nationwide. So
I will say they were using the strategic reserves from June through October.
Yeah, but
end of September.
And gas. But again, it's all the supply and demand thing. Now, one thing I'll mention has to do with energy. If you look at S&P earnings, they're up this year. But if you exclude energy from the massive energy, S&P earnings are down about 4% this year. So that's something that I want everybody to keep in mind when they're looking at S&P earnings. Now, I don't want to be that guy who's picking, what about this? What about no? But at the end of the day, when you see one sector accounting for a big chunk or all the growth and some, that to me is the indicator of where do we stand here economically from a recession standpoint.
Yeah, I mean, even if you just seclude, like look at Exxon, Chevron, and BP, I think their earnings have been absolutely insane.
Well, yeah, of course.
Absolutely insane. So that is, like you just said, you need to make it all relative.
Yeah. So this week when it comes to consumer sentiment on Friday, that's an important one to me because consumer sentiment, if you've seen our past videos, is all about where do the consumers see the economy where it is today? How are they going to do their spending going forward? 70% of our GDP is made up of consumer spending. So we have retail sales and consumer sentiment coming out. Retail sales will show us how did people react in the previous month about their spending. And the consumer sentiment is what do they see as today and going forward for their spending? If people really believe a recession is coming, it's amazing to me. Now everyone is saying recession is going to happen. Recession is going to happen. Because of that, people will probably be more likely to pull back their spending. So I look at this as a very important week to see where the consumers see they are when since 70% of our spending is consumer spending. GDP has gotten better because of a decrease in net exports or the trade deficit over the last few months. So that is something to also keep in mind. At the end of the day, I don't want to pull out little pieces here and there. There are thousands and thousands and thousands of different parameters that are involved when looking at the economy. Mm-hmm. However, I want to look at where unemployment is and where CEOs right now, I think I read something like 80% of CEOs say that we're going to have a recession and they're already cutting back their hiring because of that.
And that's global CEOs too. That's not just US based.
Well, I believe that in this kind of environment we're in, if the US hits a recession,
of course,
I just think the entire world is going to have an issue. Now, I was just in Italy last week with my fiance. And Italy's got 12, 13, 14% unemployment. But it's amazing. I didn't feel that there. And I wasn't in I was in a nice area, but with restaurants and small stores and kind of like a feel area of Italy. And I was looking at going, man, doesn't feel like 12 or 15% unemployment. Mm-hmm. And when we have 3.5% unemployment, which by the way was announced last week, and interestingly enough, when it was announced, stocks tanked. And I was looking at it going, damn, a year and a half ago, if that was announced, even if there were negative stories around it, it would have skyrocketed. Yeah. But that's my whole point. If you're new to this channel, you're going to sit there and see me looking at people's reactions to things, people's psychology and emotional reaction to money, right? And I look at this saying, the perception has changed. And that's what's important for you as an investor to understand. When the perception has changed, you have to decide for yourself, is it a real change or is it just people's perception? Because the news that occurred last week would have caused stocks to skyrocket during that bull feeling environment. But now it caused stocks to fall, even though unemployment went from 3.7 down to 3.5%. So consumer sentiment, this is the chart going back to the 1950s. Guys, look at this. We just came off the lowest levels basically in history. Worse than the 1970s. Remember, 1970s and early 80s had major stagflation. That was stagnant economic growth with high inflation. We're coming lower than COVID. We're coming from lower than the COVID crash. We're coming lower than the parts in, this is the financial crisis right here. This to me is an indicator of like, okay, consumers are going to drive the future's economy. It's a reactionary thing. If consumers start pulling back because they fear things, what's going to happen? Now, you can't really see it here, but there is a jump here to almost 60 right there. But it got the lowest point in the history of the index. And that to me was kind of like, oh boy, if consumers are 70% of the US GDP and they're afraid, what does that mean? So what would cause this to go back to more normal levels? I don't know. I mean, gas prices definitely help for sure, but we also have this Russia-Ukraine thing. Who knows what Putin's going to do? Who knows what's happening there? But guys, we haven't had a serious recession. When I say serious, COVID was a serious recession, but the government just printed checks and we were out of it in a matter of how fast. I mean, we literally went to 20% unemployment and back down to 3% in a matter of a year and a half. It was just, I look at something so big that happened and the fact that the world shut down and we were like, oh, we're done. S&P went to 2,100 and then right back up past its all-time highs of 3,360 and new highs of 4,800. So that was kind of concerning for me in terms of learning our lesson. I'm a believer that in order for us to get new highs in the long run, we have to learn tough lessons. As much as that sucks to hear, that is reality. Just think about your life. You probably got better during tough times. You go look at history, you look at recessions. The best times come in this country after recessions. After we have a tough time, we regroup, bad businesses go under, people get better jobs. After the recession, businesses consolidate and we get to better levels. So speaking of businesses, banks are coming out with a lot of earnings this week.
Yeah. So guys, earnings week is starting. So we are going to be making a lot of reactionary videos to earnings that come out, especially in the afternoon around 4 o'clock. But this Thursday is when it starts. You have Charles Schwab and Goldman Sachs going, and then you really are starting to go on Friday. I'm going to scroll through here.
That's our software, by the way.
This is our software. This is our event calendar on our software. JP Morgan Friday, Wells Fargo, Morgan Stanley, Citigroup, US Bank, PNC. So all of these banks are going next week. Then it's really going to get into a lot of these businesses that you guys are invested in. So watch out for those videos that we're going to be making.
Yeah, there's going to be a plethora of videos because as they announce their earnings, usually after the bell, we're going to make an immediate reaction video. So if they announce at 4:15, you can expect a video within 30 to 45 minutes because we built the studio for exactly that, being able to react to things in real time. It doesn't take us 10 days to make a video. It takes us 10 minutes to make a video, and then it goes live. And the reason being is after 10 days, it's old news. We want to sit there and react right then and there. We're going to pull up earnings reports. Now, keep in mind, when it comes to banks, we are investors who understand our sphere of competence a lot better than most. I do not understand banks and how to value them as a company, but I can still use their data and their earnings reports to see what they're saying. They're going to have announcements. They're going to have things they're going to say. And I will use that to understand where they see the economy going. And that's what I'm looking for from the banks. When they announce their earnings, here's what they think, here's where they're going. But we're not going to sit there and value the banks or insurance companies because we don't get that. But when it comes to everyday companies that you know and love, 100%, we love evaluating them. We love looking at their financials, their balance sheets, and understanding where we can enter the company at a reasonable cost. So if you're new here and you like what I've said, I guarantee you that if you watch 4 or 5 other videos by Mo and I, you will walk away with a better understanding of money and investing. And even if you don't agree with every single point we make, which is understandable, you should not agree with everything we believe in, then you will sit there and understand that we have a process that is very fundamentally sound. We're going to avoid the hype on purpose. We're looking for value investments that we can buy when the market perceives them to be mispriced, okay? So you need to watch this next video where Mo and I describe how we buy stocks that we like at the prices we like. Thank you very much for your time. As the market falls, one of the most common questions I get is, what stocks should I be buying as the market falls? Great question. We're going to get into it right now by looking at our process for how we buy stocks.